Hello, today I want to talk about when to invest in bonds and when to invest in stocks. Okay, the answer is quite simple. The time to invest in stocks is always, the time to invest in bonds is never. So, from my point of view, stocks are good and bonds are bad. Now, this is a difficult thing to circumvent. When you go to your local bank, your financial advisor, in practically any institutions, they are going to offer you in-house products that charge high management fees or expenses, anywhere ranging for 2 to 3%. And this is how they make money. They sell you these products, and of course they charge you a fee for it, and the fee is 2 to 3% for those products. And the catch is that these similar products can be bought for a fraction of 1%. So let's say a quarter of a percent or a third of 1% or maybe even as much as half of a percent. But of course the financial advisor will never offer you those products because they make them no money. So why are they going to, how are they going to pay for their bills and their electricity if they cannot make money on commissions? Okay, but you as an investor, you have to find out how you can save as much money as possible. Maybe one way to fix that is to go to a fee-only financial advisor where they will not charge on commission but on the time that they spend on you with you. So that is something to consider. The other thing that I found very unfortunate is that most financial advisor will show you an array of funds, mutual funds, whatever, and these are many of them are a combination between bonds and stocks. And the conventional idea is that the older you are, the higher percentage of your portfolio should be in bonds and a lower percentage should be in stocks. Okay, but this, if you want the optimal results, the best for your portfolio, if you want to see your investment grow, then the thing to do is just to go all in stocks. Go and buy as many stocks as possible and buy as least amount, in fact, buy zero bonds. And the thing is that people say that stocks are risky and bonds are safer. No, no, and no. The truth is that stocks are more volatile, but on the long run, in a long period of time, let's say 10 years and longer, stocks are as safe or even safer as bonds. Yes, they are more volatile. You may see them go up and down a lot more than bonds, but bonds, they also are volatile as well, depending on economic conditions, interest rates, so on and so forth. So it's not that they are not volatile, it's just that they are a little bit less volatile than stocks. But the returns are so inferior that you shouldn't consider. Anyways, that's my rant in stocks versus bonds. All my portfolio is in stocks. I'm 56 years old. I'm not concerned at all about volatility. And I think if I want the best return for my portfolio, I'm going to be living up to 100 years old, and I need every one of my dollars to work as much as possible in order for those dollars to provide me as much income as possible in my retirement years. That's all for today. Thank you so much for watching, and talk to you soon. Goodbye.